Welcome everybody. This is the rescheduled Thursday evening, Tuesday webinar. And first we've got to get our standard disclaimer out of the way. Today's topic is one and done. One or two and done in an hour or less. And so this is part one of a two-part series. The second part will be Saturday morning. So let's knock out the disclaimer here real quick. All communications from Viper Trading Systems are for educational purposes only. Futures of Forex trading does involve risk, and there's a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. I see we have some more folks coming in. Hey, Carl, don't worry. You know, most of you know the drill. Give it a couple minutes to get everybody settled, and then we will get started. In fact, we're going to go ahead and... Hey, Lauren. Hey, Jim. Let's get over to screen one. Let's get over, right? Let's not waste any time here. Screen one-a-roo. All right, so this is YM. I'm going to kick it off with this chart here. This is pretty much the setup that you see in the live trading room here. You know, we've got the bar colors, we've got the bands, we've got the predictor. We got the swings on here, stealth, of course, you know, all the various indicators that we use to trade. And I'm just going to keep things fairly simple. Hey, Ed, welcome. If you're just coming in, we're just kicking off, so you haven't missed anything yet. Just for the purpose of simplicity in looking at these trade setups, I'm just going to go ahead and toggle the predictor off for now. There we go. Now, what's the first thing we do? By the way, this is the 6th is right here. So midnight Pacific, just translate this into your local time frame. Midnight Pacific was here. Welcome back, everybody, from the long weekend, Labor Day weekend. This was yesterday. There was a shortened session on Monday. So some of the futures markets actually traded. This was yesterday. This was Monday. As you can see here, you didn't miss much. It was pretty much in kind of a range all day long. It was only open till I think, I want to say 9 o'clock or something, and then it reopened at night. Noon? It ran until noon Pacific? 1 p.m.? Okay. Yeah, so you had some trades on. You know, you had like a little bit of a short trade. This was overnight here, so... all right, so this was the pre-market session on this morning. This is the Tuesday the 6th. So most of you have already typed in, yes. You need to put your lines on the chart before we start trading. And we can see there's some resistance up here. There's a pre-market resistance right here around this 510 area. And then there's another, excuse me, a couple of swings up here around 520. You can make the case that there's some support and resistance here around the mid-band. Call it 87, 88-ish, you know, kind of right in there. And then, of course, you can see that there's another swing of support down in this area right here. You know, call it 60, 65-ish, plus or minus a couple of ticks. You know, you just look back, you look for some swings, you look back, you look for some swings, you look at the current market trading, pre-market, of course, you see support and resistance levels here pretty clearly defined. You know, you could put the resistance line there if you wanted to treat it more in regards to the actual pre-market itself, you know, it'd be more or less there. But you know, my line's laid out this morning just like this. Okay, and so here we come. We're coming into the open here. Let me blow the chart up a little bit, focus more on the right-hand side a little bit, so we see real clear what's going on over here. So basically, we're bouncing off the mid-band. We're coming up and we're hitting this 510, and we're pulling back, hitting it, pulling back, hitting it, pull back. So right here at the open, here's 544. Here is 6 o'clock, 6:30. 557, and there's 6:30. Now let me ask you a question. Doesn't this drive you nuts There's two things that drive me nuts. I was just going to get this right off my chest. I hate when they run markets up into the open. Don't you? I just hate that. You know, and then you know, you feel like you're chasing it right here at the open. Look at it, 6:30. And they've been doing this a lot lately. You know, right at the open, either or right before the open. This thing will start blasting up or blasting down, shooting all over the place. And you know, you're just trying to get in and take a trade. You don't want to jump in because the thing's running like a big dog. So let's look at the first couple. Doesn't that drive you crazy? It just drives me nuts. You know what it reminds me of? Back in the day when I traded stocks on that trading floor in the city. Yeah. You know, the gaps. Don't you hate gaps open? Gap up, gap down. Is it going to fill the gap? Is it going to close the gap today? Who knows? Who cares? It used to drive me crazy. Anyway. All right. Yeah. Last week, it just seems like right at the open, they kick the buy-sell programs kick in right at the stinking open. Anyway, so we pushed through the 510 and we pushed through the 520. Let's go back here. If you recall, we had another swing up here right at, I just had to get that off my chest. It's driving me crazy. Yeah, so here we are. Here's 6:30 right here. It breaks through this swing. So essentially, to be in this trade, you'd have to either, and I didn't do it. It took off too fast for me. You had to either be long from somewhere down here off of the support level, you know, or even just before the open in the pre-market, you could box this in here if you were trading the pre-market. Most of us don't. And then, you know, the risky part of it is to go ahead and box it for a long right here, or put a buy order above the swing right here. But you know how that is, right at the open, sometimes you get these little blips up, would only blip up here and then pull back into your face. So you know what, when this happens, whatever you do, and I've said this, I can't untold hundreds of times over the years, is you got to be patient and you've got to wait for some kind of pullback, because if you buy the thrust up here, anybody buy the peak? Look what happens. Look what happens. It goes in, it takes it out, and it pulls all the way back and starts chopping around the mid-band. So, you know, if you're getting sucked into trades way up here at the top, I did buy this pullback though. I got a little scalper out of this. Anybody remember that? We did catch the scalper. In fact, I remember calling out 26, 28. If it bounces there, I'm going to get in. So we did get a little pop right at the end on a pullback, because that's the retracement you were looking for right there. But it was short-lived. Yeah, it just spiked right up, took that 40 out, and then flipped within a minute or so. It just came right back in your face. So there really wasn't much of a trade here. A little bit of a scalper, not much. So you got to be careful. So we had news today. Does anybody remember what it was? What was the news this morning? ISM. Right here. 7 a.m. Pacific time. Right here. Major impact. This is a significant number. This is some non-manufacturing ISM PMI number. The Fed looks at this number. A lot of economic folks who study the economy look at this. A lot of people think it's somewhat tied to whether they're going to raise interest rates in September or not. You can see here it turned out to be a very weak number. So let's go ahead and forward on beyond 635. So what I'm saying here is this first trade on the pullback was not a one and done, because you just got a scalp out of it and it didn't really make that much money. Okay, that's the theme tonight for those of you who just come in. One and done, one or two and done trades. All right, so we're waiting for news. We come down, we're kind of slopping around the mid-band here a little bit. You know, it's in a tight little range. Comes down, finds support, you get another little bounce, finds support to mid-band, another little bounce. You could have been scalping this. It wasn't giving you much, maybe 5 ticks if you're lucky. And then it comes and it sits on the mid-band right here, right before the news. This would have been 650. You could have boxed this, allowing it to go either way if you were so bold to do so into the news. Filled you long, and then it took you short. Now here is right right before the news with 2 minutes going, 2 minutes to the news, 3 minutes to the news. Here's 7 o'clock right here. Now, what have they done before the news happened? 7 a.m. is right here. What did they do just minutes before the news was actually released? What happened to the equity markets? They leaked it. The sell programs got the early news. Yeah, we all know there's robots out there that sniff out news, and they get advanced warning on what the news is. So the robots already knew the news was bad, and the sell programs had already kicked in right here. You know that. Everybody knows that, right? They buy access to this news, so they get it within, early release, nanoseconds before the public sees it. The robots automatically kick in buy or sell programs. In this case here, you can see just before the news came out, they were selling off already, slamming it. So what do? Well, we know the thing to do is sell right down here, right? It's bad news. I'm going to hit a market order and get in right here. We know it's tanking. It was horrible numbers. Anybody doing it? Just go right in your object trader panel, market sell, loading a boat right here. Anybody jumping in with me? David D says, sure, come on, let's load it up. Just hitting major support, that's right. You don't short after a thrust, especially when it's sitting on major support. Exactly, Diane, Hardy, everybody. No, that's right. You got to wait. You have to wait for a retrace. Now, if we get a short covering retrace here, where might it come to for us to look to short the market? I'll give you 15 seconds for that. If we get a short covering retracement off of this support level, where might it come to where we would look? I'll help you out here. We're shorting. We're looking for a short. Background has changed. We've taken out all manner of support levels here. The background's red, bars are red, stealth is red, all the bands are stair-stepping down. Everybody in here tonight said wait for the retrace, which was correct. You never short the thrust and you never short support. Just like up here, you don't buy resistance at the peak after it's thrust, you wait for the pullback. We're retracement traders, right? So where are we going to get in? Everybody said retracement. Where? There are 10 seconds left. 10 seconds. Where are you getting in? Because you got to think fast. You got to think fast. Where am I looking to get in on a retracement on YM within a minute or two after this news comes out? We know it's already selling off. I see some good numbers coming in here. All right, time's up. Hardy says 510. MG, David D, David H, Roger at 510, 512. I see some ranges, mid-band. Chris, hey Chris, I didn't see you come in. 05 to 11, I like that. Somewhere between the lines and the pivot swaying. Okay, good. 510 plus or minus 5 ticks. Okay, excellent. Most of you have called out areas for your watching for a retrace short. Most of you have put numbers in that look more or less in this area right here. So here again, maybe I see there's some new folks in here, so maybe you haven't heard that before. We draw an analogy on the retracement in some of these cases. We think of it as an area, much like you would have a strike zone, right? Those of you play softball or baseball, you know you have a strike zone. Your knees are here, your shoulders are here, and this is home plate. And we're looking for a retracement right in the sweet spot of our little strike zone there. Hey Chris, no problem. It's recorded. It'll be up in the subscriber area tomorrow morning. Don't worry about it. We caught it all. Yeah. So anywhere up in here. I mean, if you set any numbers between 01 and say 15, and of course the mid band is sitting here at around 10, where this fire support swing is right here. All right. So here we go. We're looking for retracement. We're sitting right on that little swing. It wicks it, just breaks it by just a tick or two. Right here, see it? And now it's starting to pull back a little bit. Pulling back, Okay. Where is this level right here? That candle, those candles, where are they coming to? Here was our strike zone. Yeah, they're coming right into the sweet spot of the wheelhouse. So now that we're up into this area that we're looking for, what are we looking to do? And let me ask it a different way. How are you going to get in? This is a big issue for a lot of traders. I know this. I want to spend just a couple of minutes talking about this because it's one thing to see where to get in. It's a whole other matter to enter the market. So how are you going to get in? It's right here. It's coming 95-mile-an-hour fastball right down the pike, and you're swinging right at it, and you want to get a home run. So what are you going to do? Bar flip? Rollover bar? That's always the scary part, isn't it, Diane? Limit order at the sell price, bar closed down, box it in, line retracement. Okay, let's go ahead. Let's let it do its thing here for a little bit here. Okay, it's kind of bipping around a little bit here. All right, now let's talk about this here. Let's talk about this here for a second. You have several choices, okay? If you said that you turned on bar flip close in Object Trader, then in all likelihood, depending on when you did it, you would have been filled short on this bar right here, the close of this bar right here. If you didn't catch it when it flipped right here, oops, and you waited, then it's quite possible you got filled on either this bar or this bar right here, short. Either one of these two bars. Any one of these bars, you would have definitely been filled short, no question about it. So using Object Trader, your targets would have been in, your stops would have been in, everything would have been all set. Now for you, those of you that use the line or the ray tool, depending on how tightly you drew it, if you drew the line or the ray like this, super tight at a high angle, you would have also been filled short on that bar right there. Right here. Right? Because it closed below the line. If it was a ray, it would have closed there. Now, if you drew more at a 45-degree angle and you allowed the market to do this little A, B, C move, then you also would have been filled short on this bar right here. Okay? So bar close people and line and ray traders are already in short on one of those two bars. For those of you who boxed it, if you had a very tight box up here on those two candles, or even possibly engulfing that candle, then you were in either on this bar or this bar. Now, let me just open this up a little bit. And for those of you who hesitated and waited for about a minute or two after the market was sort of jostling around a little bit here, you could have quite possibly had a larger box that engulfed these candles right here. This is borderline a bad box. We know that you want it to generally have that box be under 10 ticks. 12 is pushing it. Let's see how large this box is right here. The larger box. The top is located at roughly 07, and the bottom here is, 95. Yeah, you're right at 12. This is right at the cusp of being a bad box. Let me contrast the two so we talk about it real quick here. Tight boxes, let me just extremely blow this up so we're very, very clear, because I know seeing where to enter, I think what I'm seeing is most people get that. Most of you get that. It's the actual entry, execution of the entry itself, I think really is where you run into a little bit of problems. Yeah, and you would have felt a little bit of heat. Those of you who boxed it tightly, used the tight line or bar flip and got in here, you felt some heat. You were a little bit in the green, upside down, a little bit in the green, a little upside down as it oscillated around your entry. Same with this one right here. if you got in here. The only person that didn't feel any heat was the large boxer who boxed it in at 701 after this entire area was set. But you're not in the trade yet. This is the tricky part of trading, isn't it? This is the tricky part of trading right here. This is the heart of the matter. This is the meat on the bone. You can see the trade. We can call it in the room. We can say where we're getting in, but actually getting in there and pulling the trigger is the hard part, isn't it? So here's what I'm going to suggest. We've said this in a room scores of times, is take all these manner of different types of entries, bar flip, boxing, line, ray tools, everything we have in OT and all our tools, and practice with 1 or 2 entry techniques and try to perfect them on each instrument that you trade and get really, really good at 1 or 2 of them. That's really the key. You don't have to feel like you have to master all the different trades out there. You really don't have to do that to trade and make a living and make good money. You really don't. You just need to find 1 or 2 that really work for you and then master them. You're looking for it to go higher, up to 21. Diane, I don't know. Let me advance it here. I don't know that that ever happened. We chop around a little bit more. We come up. We wick up to the mid-band. So those of you who you know, you're feeling some heat. Those of you that got in over here were definitely feeling some heat. But it rolled, stayed underneath the mid-band, so it was good. Eventually rolled over. And then those of you with the very large box finally got filled on this bar right here. Right here. Well, yeah, we were thinking short only here, Peter, mainly because, and I know this may fly a little bit in the face of our whole in the first hour, let it market go either way, but let me just frame the answer in the context of this. In this particular case, the market had already sold off. By the time this came out here, now you're looking at 705, 706. We're 5 minutes into the news. We knew the news was horrible. The market was already selling off, and so the bias was definitely to the short side. Yeah, you wouldn't want to let this take both sides. Definitely not. Obviously, you can see your scalp target is a support level down here. Here's your scalper target. Plowed right through it, right? Plowed right through it. And then you proceed to drop all the way down into here. Now, a word about trailing stops. In fact, you came down and you hit another target right here. That was the swing from the other day. See how nice it is to have those on here? When you put your lines on your chart, you really sort of frame in where support and resistance levels are, and it helps for you to see where to take some profits. In fact, in this case here, it went right through this and then bounced. Now, let me talk about exiting strategies. I have one more, let's see here. Oh yeah, Doug, you have to be careful with that. Did you get wicked out of this trade right here? You might have had your stops a little too tight. You gotta have some wiggle room on these trades. Let's see here. On YM, you got wicked out on that. Well, let's say if you got filled. Let's say if you got filled here. 500 short, and it came all the way to 10, 09, 10. That's 10 ticks. Yeah, you got to give it at least 12 ticks. You got to give it 12 to 15 ticks. You got to let the market move around a little bit. You know, the only other way to avoid it is instead of entering on a box or a line, and this is another trade technique you can do, is you put your sell order right up in here, so you're actually filled on the retracement itself. That's another entry you could actually do. You could put your sell right up in here. In other words, you're not waiting for a bar to close down, or you're not boxing it, and you're not using the line tools. You're essentially just putting it, you know, you're selling it right up here. You can do that with the line, with With Object Trader, you can put a sell order right up in there, and it will execute and put in your targets and stops. It's a little more aggressive than waiting for the rollover, but the advantage is that your stop is now way up here. And it's already established the fact that it's hit up here 1, 2, 3 times. So, and I believe the other markets were already selling off. The sniper line, that's right. You put the sniper line right there and get filled. That's another one you might want to work on. It's a very, very good tool. It gets you very aggressive entries. In fact, you wouldn't even have to go 12 ticks on your stop with that. You could actually put your stop, let OT fill it and put the 12 ticker up here, but then go ahead and drag it down to right here. That way you're only risking about maybe 5, 6 ticks if it bips in your face. Everybody see that? It never did. Of course, it rolled over. Yeah, the sniper line in the OT tool. Put the sniper line right there at resistance and let it fill. And it goes in and it will place your targets down here, it'll place your stops up here, and everything will be, OT will manage the trade just like it always does. Let's talk about exiting real quick. The most aggressive exit that you can have in most trades is a bar close up. So here you see we have close down, close down, close down, close down, all the way through here, and then the bar closes up through the swing. So we get out, we exit here. Now, in some cases where you have extended protracted runs where it does a retrace and then it drops another 20 ticks and a retrace another 20 ticks, that type of trader who's getting in and out can re-enter. If not, you could have, there's a couple of places to be a little less aggressive. You can track it at this line right here, and sometimes people use the stealth line as a stop. Are there any questions on this trade? Yeah, you're going to have to push. Sometimes you'll have to push that. If it's coming up, and if you're already short, Doug, if this snipped you, if you got in on one of these bars and it came back up to 10 and snipped you, you have to, I realize it's adding a couple of 3, 4 ticks to your stop, but you got to get it above that swing. It's got to, especially when it comes up. If your stop is sitting right here, this is where the market's short. The market's rolling over and looking to short there, and your stop is sitting right there. So you got in too early. You got to put your stop, drag it up out above the swing right here. If that happens tomorrow, either that or use the sniper line to get in at a higher level on the short. So let's do some quick math on the trade here on the first short right out of the gate. You've got, let's say you got filled at 94-ish. And let's say your scalp target was 6 ticks, so you got out down here. Yeah, 6 ticks. And then let's say you had the aggressive exit at 69. 69 to 94 is what? 19 ticks? 29 ticks. I think somehow my screen got paused. Moving my cursor around the chart. Moving my cursor. Can everybody see it? Moving my cursor around the chart. I hope I wasn't paused that whole time. Now, you see it moving around? So this is what I was describing right here. Hopefully everybody saw me draw this. Okay, just a quick recap. We had the market was running up. We had a scalper here. We chopped around the mid-band. You had a mid-band trade right here. You could have already been short because the market sold off into news. If you weren't already short here, you had to wait for the retrace. We all called out. We're looking for something. This is our sweet spot of the strike zone up around the mid-band. It came right to it. We discussed that it could have been boxed or line or ray tools to get in, filling on these bars. And we discussed keeping your stop above this swing, even though it might be a little bit more than 10 or 12 ticks, maybe closer to 14 or 15. Sometimes you have to make slight adjustments in your stop levels if there's support and resistance located close by. We talked about also an entry method called using the sniper line in Object Trader, which could get you in closer to the resistance on the short, and the fact that in the sniper line case, where you're getting in up here and not waiting for bars to close down here, that your stop can be much tighter right here just above the midband in the swing. So in this case here, the sniper line trader is only risking about maybe 4, 5, 6 ticks. See it? The sniper line trader. So that's the different entry techniques here, and I would suggest that you take your object trader tool and experiment with these different in-sim, different entry techniques to get in. And the final entry was the trader who used a larger box to just engulf this whole area, which is about 12 ticks. That's borderline bad box material there, you know, that's right at the cusp of it. You don't want to get much larger in a box because then it turns into a breakout trade, and those usually don't work out very well. But that trader was filled right here. We discussed that it came down and took this pivot out here, so if you had your scalper set to 6 ticks, it took this right out. Okay, there's your scalper. And then the aggressive exit was on the bar flip, and you could have used trail stops here and trail stops at stealth. But by the time you got over here, all the different traders' exiting techniques were out of that short. And so you made roughly 6 ticks on the scalper, and 29 is 35. 35 times 5 is what? 165 bucks, roughly $150, $170 roughly on the shorts here. How many of you would be done? $170, one trade. Maybe you felt a little bit of heat, maybe you didn't. The trader that used the sniper line actually made more than that because they were actually out of the scalper here, and their drop would have been closer to probably 35, 40 ticks. This entry up here. Well, some of you might keep trading. So though for those of you that keep trading and you stopped out and you're looking for re-entry, where are you going to get in? Where's the re-entry on this trade? By the way, let me make a suggestion, and for this, particularly for those of you that are new, try not to focus on the money. Everybody wants to say, how much money am I going to make? Did I make my goal today? I want to make $500 a day. I can't tell you how many times I've heard that one. It doesn't work that way. Trading does not work that way. It's not like going to an office and getting a paycheck because you worked 40 hours this week. Trading simply doesn't work that way. One day you'll make $100. Next day you could make $600. And then 2 days later you could lose $150. It's going to be up and it's going to be down and it's going to be all over the place. You have to be prepared for that. In the beginning, when you're learning how to trade and you want to build a successful track record, not focusing on the money, because you want to build your confidence. Don't worry too much about the bank account. And let me just be explicit about it. For some of you, getting a $50 win or a couple of $100 wins under your belt is all you need to start building your confidence in terms of seeing the entry, seeing how to manage the trade, and seeing where to get out. Because you can always leverage up. You can always add more contracts. The key is to get the confidence and to see the entries and then manage the trade once you're in. That's the critical key to your long-term success. The money will eventually come if you master that. All right, good. I see some numbers coming in, and for the short re-entry, I see very good numbers coming in, and they all seem to be kind of hovering right around here. So this is our new strike zone. If you said anywhere from about 76, 78 up to 90, that's good. Yeah, so I mean, you know, you don't have to draw these boxes actually right on your chart, of course. Everybody knows that. You can just visually do it. You know, you can see clearly the mid-band's at 85, and you can go a couple of 5 ticks above it and a couple of 5 ticks below it. And just you're watching the market coming up here, and you're getting prepared to re-enter short, yes? So let's advance the chart. It's coming up. It's coming up. It's coming up. What's it doing right here? right down the pike again. You know, I have to be honest with you, that's what one of the reasons I really like to load the boat and trade YM most mornings, is because out of all the instruments, you know, it's one of the ones that tends to be a little more methodical in its movement. It moves more than ES, which tends to be very slow. It doesn't move quite as much as NASDAQ or the Russell. Of course, the Russell is twice the risk at $10 a tick, right? But I like how it's a little bit smoother, and I can load it up with a lot of contracts. Right here we get a little pause. This is 10 minutes after the news. This is our retrace. We've already stopped out of our first short. Technically the second trade. The first trade was the scalper over here, but I'm not really counting that. And we got 35 ticks on this move right here. So just do the math times however many contracts you put on. You know, if you put 4 on and scalp 2 and then caught the other one with the runner, then you double that money. You're up 340 bucks, roughly, $330. All right, so we're coming up here. You know, you could have put a sniper line up here. You could have put your box. You could have drawn a line. You could have used your ray tool. Whatever technique you use to enter. The box trader is filled on this bar short right here. The line or the ray trader, depending on how you drew it, would have been in right on this bar right here. Or if they drew it more aggressively, you would have possibly gotten in on one of these bars right here and felt some heat on it. Yeah, that's all you're trying to do, David D. Really, in the morning, you're just trying to get 1 or 2 winners under your belt. That's the whole idea of what we're doing here, is you want 1 or 2 winning trades. And it really doesn't matter if you made $50 or $500. The key is to build the confidence, see the entries, use the tools, and then once you're in, properly manage the trade. All right, so we come down, we touch this support level from which it bounced last time. We're short. Scalper target would have been somewhere down just under the swing. So I'm guessing maybe right there. And then we drop all the way down to fresh swing lows. So there's still sell programs still in control. Let me show you. Now, here's the thing. For the aggressive trader who exits on bar reversals, you could have gotten out there, which actually cut off the rest of the trade. Okay, so you have to be careful with that and in your use of that. If you have really trending days, you really want to leave your stop out a little bit looser. Excuse me, just taking a quick sip of tea there. Can you see how, and this is what you're going to find a lot. If you really study price action, you're going to see that as you get these little ABC moves, ABC, 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 all the way down, it tends to come back to this one line, which usually hovers right about around where the stealth line is. See it? See it how it kisses it and kind of rolls over? See it kind of kisses it and rolls over? You know, you have to be patient and just let these markets go. Now, when you come down and you start to see a little double bottom, and I remember calling this out. I think I called out 49. I believe it was 49. I recall calling out. It went all the way to 45. You got a little double bottom here. Now, when you see this happen, it's okay to go ahead, you know, because you've already dropped by this point here. You've dropped from 70, what is that, 75-ish, all the way down here to 45. So this is another 30 ticks. By the way, just a little sort of kicker for you here. I've noticed with YM, and it varies from instrument to instrument, but for YM, once you've moved into that 25, 30, 35, even pushing 40, rarely will it go 40 without a retrace. You're probably going to get a retrace, because what's happening here is that all those shorties who are short from all the way possibly up in here are covering. They're taking their profits. That's what causes this sort of retracement, counter trend, push back up. The lifting comes from the short covering. But sell programs kick back in. Shorties around the world are shorting, and then you get some modest amount of short covering right here. That causes it to drift back up like this. Sell programs, people sell, come back in. The downward force, the bears reassert themselves. It continues down, continues down, continues down. Now, at some point, it's going to find some level of support where, you know, the sell programs start to take profits again and cover, and the natural tendency in the market reaction is going to be to push it back up. So eventually that's going to come up and get your stops. So with that long-winded explanation, what I'm saying is that after it's dropped 30 ticks, plus or minus a couple of 5 ticks, and you're starting to double bottom, you're going to really want to crank that stop down. Don't give it all the way back up into here. So when we say tight stops, this market's dropped 30 ticks, look to take profits, tighten the stops. That's what we're talking about. Yeah, it dropped a lot here today. You had a heck of a run down here, Hardy. This definitely could, you know, you know, for those of you that caught this short and caught this short and caught this short, you know, you were in the green. You were in the money by the time you got down here. Definitely, no question about it. Even with a couple of contracts, you were doing pretty well. Okay, one last question. You think we're going to get one more trade out of this? And if we do, where might it come to for us to reshort it? Now keep in mind, and Hardy just pointed this out, it's already dropped a lot from all the way up here. It's dropped a lot. There will be some short covering here, no question about it. And the question then becomes, how far will they push it up? And will you get one more rollover to get one more short trade out of this move? We're going to find out in a minute. But if you're looking for it, where might it go to? Sorry, I'm having a little scratchy throat here tonight. If you might notice, I'm just taking a little sip of tea here now and then. All right, I see some numbers coming up. Possibly a phantom, mid-band. Yeah. Yeah, I mean, if you notice the patterns here, it comes down, it finds a swing, comes up right around the mid-band, rolls over, finds another swing, comes up around the mid-band. Here's another 30-tick drop right here. And so we would expect our little strike zone to kind of be sitting somewhere up in here, right? This is visually what we're looking for on a retracement. That would be our little strike zone for a pullback. All right. So here we are. You ready? Good calls, everybody. Everybody's putting in some good numbers tonight. Hopefully this is helping you see all these setups. All right, here we go. We're definitely stopped out here, no question about it. If you had it on a bar flip to get out, there's no question by here. Some of you could have put it just above, dragged it right down into here, just a tick above that 50 on the wick of that candle there. By hook or by crook, you're out on that bar here, so you're stopped out. Here's our sweet spot. Looking for a retracement right up into this zone right here. And when it gets there, before I advance this to see what happens, type in, let's say that this is tomorrow morning. Let's see if we have any news tomorrow. 7 o'clock. It's minor. You got FOMC, Jolt's job openings, and then the beige book at 11. So it might be a little choppy in the morning, but let's say we get a very similar setup. Go ahead and type in your entry. What type of entry are you going to use tomorrow morning? Tomorrow morning you're sitting here and it's 7:27. And the chart looks very similar to this and you're looking to short. What entry technique are you going to use? If and when it was to get up anywhere up into here. What technique are you going to use? Just go ahead and type it in. Are you going to use the ray tool? Are you going to box it in up there? Are you going to use bar flip? Are you going to put a sniper line up right around the mid-band? How are you going to get in? The reason I'm asking this is that we all should have, and I said this earlier in the webinar, we all need to have a go-to trade. Mine happens to be the box. I love the box. I love mid-band boxes. Good Lord, I could do those all day long. I love anywhere at or around the mid-band. I love boxing that puppy in. I just love it. Occasionally I'll use the line tool. Occasionally I'll use a ray. I have put sniper lines out there occasionally, but the box is my go-to trade, no question about it. I already know what I'm going to do. I know ahead of time. Everything's all set up. Top of the box, bar close, fade the mid-band with a tight stop. Okay, good, good. All right, so what this is telling me is that you're already thinking through how you're going to get in. See, this is really important. We can't we have to be a little bit proactive in the fact that we're thinking ahead about what could happen to be prepared for it. We're not looking at a crystal ball. We're not trying to predict the future. We're not, because we don't know what's going to happen. However, we can be prepared for it, and we have to kind of already know what we're going to do. Yes. All right. So let's see what happens here. We're kind of bottoming out a little bit at this 45, starting to retrace. We already stopped out of the trade. It's coming right up. Let me move this just a little bit so you can see a little bit better. What's going on right here? What is happening right there? And this is where the rubber meets the road, right? This is where the hammer strikes the anvil. Use whatever little analogy you like, but this is where the decision needs to be made, how and where and what you're going to do to get in, because you are right down the pike. Textbook, right down the pike of that strike zone. So some of you are probably boxing it right here. I believe I did. You can engulf this candle, the wick of this candle, or you could go as far as that candle right there. I'm not going to go through all the tools. Everybody knows. Some of you said that you were drawing sniper lines up here. You're going to fade the, oops, what happened to my line there? Somebody typed in, who was it? Said you're going to fade the midband a little bit with the sniper line. You probably were filled on the wick of that bar right there if you did that. Short with a tight stop just above the midband. Those of you with bar close might have got, well, probably got you. Bar close traders would have been filling probably on this bar right here. Although it really depends on when you activated it. It's quite possible you got filled on this one. Yeah, it's rolling over at resistance. You're shorting up here. We're looking for trend continuation. This is the well, arguably you had a short up here, but we were saying we didn't take that. That was just ahead of news. And at the time it occurred, the background was green, and we were looking more for long trades. So we're not counting this one. Yeah, and we had a scalper earlier we're not counting on either. That little long scalper right there, that didn't make anything. So the trades really we're tracking so far is trade number 1 was really here. Trade number 2 short was right here. And we're looking, we got trade entry number 3 right in here. For those of you box traders, you were filled on this bar right here. Right here, short. OT, put your target and your stop in. You felt a little heat, came against you a little bit here, but it stayed under that swing. So here again, if you get filled on that bar and you're using 10 ticks as a stop, which is tight, you normally want to go at least 12, possibly 15 sometimes. You got to give it some wiggle room. You got to make sure your stop is sitting above this swing right here. You don't want to get to a point where, you know, your stop is sitting right here so tight, you know, because you're nervous you're going to take a loss. I know why you're doing it. I know why traders do that. A lot of times they're putting that on there, and the reason they do that is because you don't want to take a hit. I know why you're doing it. I know. I used to do the same thing. I used to put my stops so tight, and I get stopped out all the time, and then the darn thing, you know, it's like this right here. I know. I've been down this road a million times. I know how it works. You got a really tight stop sitting right here, you know, up in here, and it nicks you by a tick or two, you know, because the thing was too tight, or maybe even, you know, it's sitting right there and just wicks you right out. And it rolls over, and you're like, dang, how do they know my stop was there? They hit my stop and rolled over, and then it turned out to be a good trade. How does that always keep happening to me? Why does that happen to me all the time? Because your stops are too tight. And here's why your stops are too tight. Because you're afraid to take the loss. You have to be able to take the loss. If this thing is going to come all the way up here, say 10 or 12 or 15 ticks, whatever this is up here, and take that out, you're just going to have to be prepared to take the hit. Okay? And if you're not prepared to take the hit, then you shouldn't have that many contracts on, or you shouldn't be trading that instrument. Because it's inevitable that at some point you are going to stop out on a trade. It's just going to happen. Nobody is 100% perfect as far as I've ever seen. You got to be able to be comfortable. When that stop is in there and it's sitting, or let's suppose it is sitting right here, and you say, holy cow, it's going to go up and test that swing one more time, just like it did over here, right? You drag it up a couple of 3 ticks so it's up just above where the resistance level is, and it should stay underneath of there. Now, when you get your, when it eventually does roll right here, and you get your scalper on, yeah, then of course, yeah, use the break even plus minus, get your, you know, if you have multiples on, you know, take the scalper coin on the drop, and then come in couple of 3 ticks behind your entry. Everybody knows that, right? We've talked about that scores of times too. The break even plus minus after you get the scalper. If you haven't used that feature, you should work with that feature too. Any questions? Let's see what happens to this trade here. Okay, we come up and we start to chop around. I think we closed the room right about here. That was the final trade. Those of you with aggressive stops on the bar close, of course, you can see what it got out right here. And those of you with the looser stops up near that line and or the stealth line, your trail would have been taken out somewhere right in here. Yeah, on your trailing runner. So what do we get here? Let's just do some rough numbers, just very rough numbers. 3 shorts, technically 4, but we're only counting 3. This one, I'm just going to go top to bottom. I'm not going to count the scalpers. This one I think was 29. This one here was 75 down to, I don't know, call it 50, 25 on that one. And then you didn't get much out of this third one here. You got in at roughly 58-ish, you know, and maybe you stopped out at 48. So you got 10 on the last one. So 29, 25, 54 plus 10, 64 ticks. If you didn't do the scalper program with the 5, which would add another 15 or $75 to your deal with the scalper, would be 75 because it was 5 ticks, you know, 5 or 6 tick pops. 3 times that, 18, call it $80. $80 on your scalpers. And then what do we say? Here, hold on, let me quickly do the math here. 29 plus 25 plus 10 was 14. Was that 50, 60, 64 ticks? 64 times 5, 320 plus your scalpers, right around $400, including the scalpers. Between 350 and 4, depending on how you know, whether it was 5 or 6 scalps, where you actually got filled, what your entry were, you know, how I actually took the trades. But this turned out to be 3 trades in an hour, and you made right around $400, plus or minus. Yeah, the success rate of this type of technique is very high, David, for a couple of reasons. I would say the reasons why is that when you're using our indicators as I'm describing right here, you're trading with the trend. So just by doing that alone, well increases your odds well above 50-50 of making money on the trades, right? Secondly, we're using good entries and good targets and stops. So we're maximizing the amount of our exposure to the market, excuse me, our exposure. Hold on one second, please. In other words, we're maximizing the money we make while we're exposed, taking risk in the market. So that increases our odds of success, and we're using the tools. We're trading with the trend, and we are in the high volatility, high volume time in the first hour and a half of trading between 6:30 and 8 o'clock. By doing that, you're putting the odds in your favor. I can't say it's 90+%, but I'd say it's probably north of 75 to 80%. When you're trending like this on a news day in the first hour and a half, especially right at 7 o'clock, yeah, very high probability. So what you want to do as you're building your confidence, you want to try to get a couple of good winners under your belt. Don't worry about the money so much, because what's going to happen is that, I'll just put this in here for those of you that are transitioning from real money. Treat sim like it's real. real money. That's really critical, because if you don't do that, when you transition from sim to real money, you're going to have a real tough problem, because now you're going to be super nervous when the real money's on the line and you're seeing the real money go up and down and you're getting all twists and turns in your stomach and your palms are sweating and nervous. It's because you didn't treat the sim money like it was real. When you're in that sim trade, pay attention to it just like it's real money. That way, when you go from sim to real, it won't feel so bad because you already know what that feeling's like. Okay? The other thing we talked about to remember is go ahead and just, let the market move. In other words, give it some room for some stops. No more tight stops, okay? Let's all agree on that. No more tight stops. Look at where your swings are relative to your entry, and then adjust accordingly if you need to on your stops. Don't crank them so tight that you get stopped out every trade, and then the thing runs in your favor and then does it over and over again every day, right? Let the market move around a little bit. And then when you do transition into, master 1 or 2 trade entry techniques. Don't try to learn everything. I've been trading over 20 years and I don't use all the trades. Okay, develop a couple of go-to trades. You should have that right in your quiver, ready to go every morning. Okay, and that'll do it. And when you transition into real money, here's the most important thing, and I forgot to say this too. Please, 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 when you're getting started, do not focus on the money. You are more concerned about good entries and trade management and not about the money. If you got in each one of these trades and you made $50 and each one was a winner and you came out with $150 in your trading account, that was a good morning. Right? Because your confidence is high. You saw the proper trade entries. You pulled the trigger. You managed it correctly. Now your confidence has been built. The next trade, now when I say confident, I don't mean get over exuberant about it, get sort of all full of yourself and cocky about it. Well, I'm just nailing this market. I can take any trade I want. No, that's not what we're saying. What we're saying is that once you have some confidence, you feel like you can see the market a little better. And then, of course, the most important thing, one of the other things, and it still should be almost number one, is make sure you select, let's put it select, should be select. Select the proper instrument for your trading style. I can't tell you how many traders I've talked with over the years. Tell you what, Charles, I've been trading this crude oil. I've been trading it for months. Oh, yeah, okay, crude oil. Okay, all right, I see that. How you doing? Well, I lose money every day. Really? Yeah, I don't know what it is. I go in, I think to myself, I'm just going to go in and I'm going to nail crude oil right at the pit open. I'm going to make some good money. And every day I get body slammed. What is the deal? Maybe you shouldn't trade crude oil. And I'm not picking on crude oil. I'm just saying that's any instrument. If you go in there and you trade whatever, maybe you trade YM and YM's kicking your butt all over the place. You can't figure it out. Well, maybe that's not the instrument for you. Just because I trade it doesn't mean you should trade it. Maybe NASDAQ is an instrument. We know a lot of traders in the room who trade gold, dollar index, ES, and all manner of currency futures. So, these techniques and the tools can be used on anything. But if you follow these simple little rules here, I think it's going to help you a lot. All right, that's a wrap. I went a little bit over. My apologies. I'm going to go ahead and stop the recording.